Dear students, my name is Subramaniam. Dear students, in this video, I am going to share a preparation strategy for financial management, particularly for CA Inter. Hey, dear students, I would like to ask you one question. Are you waiting for the results for preparation? And are you sure of passing January 2025 attempt? Hey, don't wait for results, right? Start your preparation with our masterminds. What? What are you saying? Oh, lot of time left, huh? Oh my God, dear students, I would like to tell you one small secret. Present time will become past within the time of Top Gun blast. So that is the power of time. The time will passes in such a way that you would be shocked. So that's why start your preparation immediately, particularly with respect to financial management. What to prepare, what chapter to prepare, everything I'm going to explain in this video. Pay attention, watch this video till to the end, right? Yes, coming to dear students, I would like to tell you financial management weightage of the paper is 50 marks. The pattern of question paper consists of three things. Number one, MCQs, 15 marks. Descriptive part would be a 35 marks, which includes theory part also, dear students. So that's why you have to pay attention in learning MCQs, descriptive part and theory part. Total syllabus I classified into three priorities by observing past exam trend and weightage. First priority chapters, second priority chapter, third priority chapter. Finally, you have to prepare all the chapters. Okay, now, right? Coming to here, first priority chapters. So, what these chapters? The first priority chapter, the first chapter is leverage analysis. Dear students, leverage chapter is such an easy one. Compulsory, they are giving questions from this model. That's why don't neglect this chapter. In this chapter, you concentrate about the calculation of leverages. Three types of leverages: operating, financial, and combined leverage. That is a first leverage. Thereafter, what is the pattern of giving the question? Prepare income statement. That's a preparation of income statement. The pattern is like this, dear students. They will give you income statement. They will ask you leverages. Sometimes they will give you leverages. You have to prepare income statement. This is another model from this area. And a comprehensive model is there where they used to ask asset turnover ratio, break even point, margin of safety, financial leverage favorable or unfavorable, and segmented due to analysis. So this chapter you prepare well immediately, right? These models are very, very important. Coming to next one, cost of capital. Dear students, whenever company need a capital, the capital rises from various specific sources. And at one point of time, the company has to estimate what would be the cost of capital that the company must earn to keep the expectations of fund providers. That is the theme of this chapter, right? So in this model, what you have to learn or what you have to concentrate means, first of all, estimation of specific cost. Pay attention. Cost of debt, redeemable, irredeemable. Cost of preference, redeemable, irredeemable. Cost of equity, coming to dividend based, EPS based, yield based, risk based. All these models you pay attention to learn first of all the specific cost. Okay. Thereafter, concentrate to learn weighted average cost of capital basing on book value, basing on market value. Dear student, don't forget, while estimating weighted average cost of capital basing on market value, what would be the personal tax impact, what would be the flotation cost, particularly with respect to calculation of cost of retained earning. Keep this point in your mind. Thereafter, marginal cost of capital. Whenever company need an additional funds, so we used to compute marginal cost of capital. While estimating additional funds, what would be the risk element of equity shareholders as well as debenture holders? Pay attention on this. Then this chapter is superb. Okay. Thereafter, one more chapter is capital structure. Capital structure is a mix of long-term funds. Every capital structure as a consist of debt equity mix in such a way that so the overall cost of capital should be low and market value has to increase. In order to identify optimum capital structure, we used to make different types of analysis. We used to follow different types of approaches. So EBIT, EPS analysis, EBIT, market price analysis, indifference point analysis, financial break-even point analysis. Among this, you pay attention particularly for EBIT, market price analysis is very, very important. In first analysis, you must have a skill to compute EPS from the given EBIT, where sales minus variable cost contribution less fixed cost EBIT minus interest EBT less tax EAT minus preference dividend, you will find earning availability equity shareholders. divided by with number of equity shares, you will get EPS. In which financial plan EPS is highest, you select that one. That is that one. Coming to second one, EBIT, market price analysis. Market price can be computed by multiplying EPS with a PE ratio. Okay, so in which financial plan market price is highest, that would be recommended. What about indifference point? It is the level of EBIT at which EPS remains same in between two financial plans. So that is the competition of indifference point, and at the same time decision making basing on indifference point also you learn. And finally, don't forget to consider the financial break-even analysis. It is the level of EBIT at which EPS remains zero in given financial plans. So these are the capital structure analysis to identify optimum capital structure. After we have capital structure theories. Dear students, theory, a statement of fact, is based on certain assumption and condition. Capital structure theories guide us to determine an optimum capital structure. So examiner may examine you basing on these models. Particularly, you concentrate about the three models. One is the model, Modigliani-Miller approach, net operating income approach, traditional approach. In Modigliani-Miller approach, don't forget to learn market value of estimation, levered firm, unlevered firm, in the presence of tax, in the absence of tax. This is very, very important. Thereafter, net operating income approach, and then concentrate traditional model also. Okay. Thereafter, dividend decision. Very, very important chapter. This is also. So, dividend decision, whether company has to declare a dividend or not to declare a dividend. So, this is the dividend decision. In this dividend decision, we have multiple models, relevant model, irrelevant models. Under the relevant models, what the argument is, dividend decision will influence the market price. Whereas irrelevant model argues that dividend decision never influence market price. The market value of the company depends upon its investment decision, where earning plays very, very important role. In this model, you concentrate most importantly, particularly Walter's dividend model. Thereafter, Gordon dividend model, right? This is very, very important. Walter and Gordon dividend model, and the Modigliani-Miller irrelevant model, where dividend decision does not influence market value of equity as well as market value of firm. And thereafter, dividend discount model also very, very important. Coming to second priority, capital investment decision. So capital investment, it is a systematic evaluation of long-term project. In order to evaluate a long-term project, we used to study various traditional as well as modern methods. But examination point of view, they will concentrate only at discounting techniques, particularly NPV, net present value, thereafter profitability index, thereafter IRR, discounted payback period. These methods plays very, very important. In calculation of NPV, you concentrate various concepts: treatment of working capital, treatment of subsidy, treatment of tax, and depreciation. Depreciation when in the presence of tax, in the absence of tax, variable cost ratio, contribution ratio, as well as terminal cash inflow, yes, and profit versus gain, one time initial expenditure, that is also important. You, by considering all these things, learn NPV and profitability index and IRR and discounted payback period. Very, very important model, dear students. Thereafter, ratio analysis. If you want to know how company effectively working or not, what is the strength and weakness of the company? So for this purpose, you have to analyze the financial statement of the company, where financial statement consists of trading account, profit and loss account, and balance sheet. So these statements could not reveal directly any information. You have to analyze it. In order to make analysis, there are multiple ways are there: funds flow analysis, cash flow analysis, comparative statement analysis, common size statement analysis, trend analysis via ratio analysis. But in our exam, ratio analysis plays very, very important. All the ratios you can learn within the one strategy, CLAP principle. C indicates capital structure ratios, L indicate liquidity ratios, A indicate activity ratio, P indicate profitability ratios. So in this model, what happened? They used to give some income statement and you have to calculate the ratios. This is the first version. Second version, they will give you in ratios and you have to construct income statement of the company. Comparing to first one, second method plays very, very important. Okay, keep this point in your mind. Thereafter, third priority chapter is working capital management. Dear students, working capital management chapter is a damn important, but give last priority because it consists of multiple models, and among this multiple models, I will give you some models. You immediately start preparation in this chapter, you can clear the paper. So working capital management. What is a working capital? It is the amount of capital required to do day-to-day business operation in the simplest way. So net working capital is nothing but current assets minus current liability. In this model, you must estimate how much working capital is required. The working capital estimation can be done on cash cost basis and total cost basis. What do you mean of cash cost basis? Learn it. What do you mean by total cost basis? Learn it. Okay. And second priority, debtors management. Under this debtors management, evaluation of credit policy, very important model, and evaluation of factoring service, and the effective cost of factoring also you learn, these students. Thereafter, operating cycle you have, operating cycle. And don't forget to learn cash budget also. Systematic estimation of availability of a cash at a particular time period is known as a cash budget. So this is the working capital management, right? Coming to not only problematic, right? Sometimes you must concentrate theory also, because whenever any problematic question is really problematic at the time, this theory question will support you. So for the sake of theory questions, remember these chapters and prepare this chapter well. One is the types of financing, another one is the scope and objective of financial management, and working capital management. Working capital management also, Baumol theory, Miller theory. In scope and objective, what are the various decisions of financial management, role of financial manager, profit maximization versus wealth maximization, what are the various decisions of financial management, concentrate, types of financing, where venture capital financing, commercial paper, American deposit receipt, global deposit receipts, security financing, right? All these concepts you have to identify. Okay. And finally, dear student, what I would like to say, when you are handling the topmost professional question paper, right, have the attack strategy. Don't fear, right? Make an attempt that at any cost you are going to pass. Okay, have the winning mindset, and your preparation one time, one day, no, nothing is possible like that, right? So only you must maintain consistency. And one more thing is, visualize the celebration in your preparation. You are going to get the results. In such a case, what will going to happen? You visualize it so that it will gives you a lot of motivation to prepare. And finally, don't give up before miracle happens, right? You can do with the support of masterminds. Jai Hind, Balasubramanian.